One of the reasons why there are few traders who are consistent and profitable is because of taking low quality trades. And one of the reasons, or one of the major factors that are leading to that, is taking trades with less factors being put into consideration. Now, the moment you're putting few factors or less factors into making your decision to take a trade, right, it means that you're trading with no confluence. Now, confluence, when we speak about confluence, we mean putting factors together. It's like a junction of factors coming together to make a final decision. Now, most traders do not have that. That's why you hear people saying only 5% are making money and 95% are losing money. Why? Because we just want to look at, we draw our levels, and then when trades come there, we're looking for just one aspect. That is very wrong. You need to look for a number of factors, and that's what we're going to be speaking about today. Hello, everyone. This is Paul from the APN Academy, and in this video, we're going to be speaking about confluence trading, right? Now, we have two types of confluences that you have to look at, right? One of them is time frame confluences, and then the second one is analysis tool confluences. What do I mean by this? Remember, we've already said that confluences is when you're putting a number of factors that will affect your final decision to take a trade, right? For example, if I want to take a buy, I'll need to put 1, 2, 3 factors into place before I can take a buy. If they're aligning, then we can put them together. Now, when we speak about time frame confluence, we're saying that we need to have a number of time frames speaking the same thing, right? Then two, if you speak about analysis tools timeframes, it means that you're putting a number of tools together. For example, you can draw a support level, resistance level, and then you can add in a tool like a Fibonacci retracement tool, or you can add in a tool like a moving average, right? Now, if these tools are aligning and giving you the same area, it means that that area is a very strong level whereby you can take a high quality trade from. Are we together? I hope this now makes it very clear. Now, this video of today is going to be a little bit different from the ones that we have made, because you guys have requested us to break down trades, how we do the trades, because we have been back testing in the previous example. So in this video, I did an analysis, and I'm going to break it down for you step by step, right? That's how the video is going to be. So let's start with the first one, which is time frame confluences. Now, I took an example. This was a monthly time frame, which we normally use for direction if you've been following us. So what happened? If you look at this trade here, the market was making lows. It made this low, made a lower high, made a lower low, and came back and retested this level here. Now, this turning point is very important. I've been mentioning, I don't know how much I can stress it, but I'll keep stressing it. Turning points are very important. Most of you are looking for historical places. That's why you find yourselves having very many lines on the chart. You just need to consider the current or the immediate turning point. You don't need anything. By the time the market has reacted from this turning point, it means it's respecting something behind. So there's no need to go and look for historical places, right? You just need this current one to make your work easy. Now, you can clearly observe this turning point here was being broken currently, right? So that's why we've stated here that the support is being broken. Now, if support is broken, what we want to see? We want to see a market coming to retest, and then we can continue down. That's the basic, right? Because you know that from lower low, lower high, lower low, when the list low is broken, we need the retest, and then this is a turning point. When it is broken, we need the retest still. Again, when this turning point is broken, we need the retest still. It's the same concept we're applying here. Now, let's go into weekly, right? I just want to show you the time frame confluence, that if you're using time frame confluence, at least a number of time frames should be speaking the same thing. Now, since we're seeing a breakout in monthly, we also need to see a breakout in weekly. Let's see if really we shall have that, right? So if you come down to weekly, which we use for structure, if you're a swinger. Now, personally, I'm a swinger. That's why I'm using this example. But it doesn't matter the type of trader you are. In case you're a day trader, it's also fine. So when you come down to weekly, this is the same chart. This is the same chart, but the only difference is this is monthly, and then this is weekly. So you can clearly see also the market was breaking structure, retesting structure, and then currently we are breaking below this turning point. This turning point is this same turning point here, but the only difference is this is monthly, this is weekly. So we are breaking down. Are we together? So meaning monthly and weekly are communicating the same thing. This is already a confluence, right? It's already a time frame confluence. Monthly, weekly communicating the same thing, meaning that level is a solid level, right? Now let's go further. Let's look at daily, at the entry time frame. Here I didn't use daily because as a swinger, you're using monthly for structure, weekly for monthly for direction, weekly for structure, and H4 for entry. Now also H4, you can clearly see we had a breakdown. It attempted to retest this level, but it did not retest it properly. You can clearly see this price stopped here. So we need to see a retest. Now this is how you do confluence analysis. I've already now broken down and I've looked through all the time frames I'm going to use to take my trade, to make my decision. Now let's try to look at how did it play out, right? How were the results? Let's start from monthly. Now, remember, I wanted the retest of this same level. This was the turning point that we're talking about, and the market broke. So wanted the retest, and you can clearly see the market came and retested, and currently it's heading down, right? Now, also look at weekly. This is the same turning point, and when we broke down, the market is now coming back to retest. It attempted the retest here, which we're seeing in H4, but it wasn't a proper retest. So you can clearly see the market now has come back for this retest here. Now let's look at how H4 is looking like, right? Now you can clearly see H4 also we are having now a proper retest. Are you getting it? This is what we mean by time frame confluence. I first showed you how you are going to look through the time frames, monthly, weekly, and H4, your entry time frame. You need direction, you need structure, then you need entry, right? These are you need to have those 3 time frames. I've been mentioning this, but I'll keep stressing it because for one to learn properly, we need reminders. We need reminders, right? So we have our direction in monthly, we have our structure in weekly, and then we have our entry in H4. So this is how it played out. Now let's also look at the results. How did the results come out, right? Let's just look at how they played out, right? Now you can clearly see we did have our rules of entry being met here. We had inverse head and shoulders, and then the trade was taken when the market broke down and retested. So, and then we had our nice 1 to 3 and the take profit being hit. It of course continued down, but remember the rules that you're following. You need to first get a structure. Now, if the market is continuing and there's no structure, you may find yourself just trying to jump into the trade, and then you're caught offside. For example, here, the market, when it hit this level here, even if it is still bearish, but it had to first come back and retest a lower high here. If you don't understand these market movements, you'll enter into the market around here, and maybe you have little capital. In most cases, most traders, what they go through, risk management, poor money management, and then you hit, then the market goes into your direction. So always first get a direction properly, then you get your structure, and then that's when you check your entry time frame. After that, plan them properly. Plan everything before saying that this is on my watch list, just like the way you've seen we did in the previous slides. We first analyzed, we looked at the direction, we're like, what's the monthly doing? The monthly is breaking this level. Let's check it in weekly, right? When you checked in weekly, you also saw that we're having a breakout. When we went to our entry time frame, we saw that also we're having a breakout, and the retest was not proper. It was clearly appearing. Then when we went to the results, you saw that we had the retest in monthly. When we went to weekly, also we had the market retesting. Then we went to H4, and we saw also there was a retest happening. That's what we call time frame confluence. You can decide to do confluences in that way, or you can decide to do confluence in this second method that we are going to look at. And what's the second method I talked about? We talked about analysis tools confluence. Now, by analysis tools confluence, I gave examples of like Fibonacci retracement levels, moving averages, supply and demand levels, support and resistance. You need to, when you're doing analysis, you need to bring some of these aspects together, at least 2 or 3. Then you know that this region that I'm dealing with, or this level that I want to take a trade at, or I want to exit at, is a very, very strong level. You have to bring all these things together. So let's try to look at the same example, right? The market was retesting here. I started from where the market was retesting. The same example up there, right? Now, when you come back down to the weekly level, let's look at what the weekly level is doing. Also, we have a retest happening here. Now, when you come down to H4, you may want to bring in a confluence, even if you wanted to use weekly, because also we have an impulse from up here, up to down here. This is an impulse. And you guys know, I'm just going to put it in the cards in the top right corner, Fibonacci retracement levels. We have a video on Fibonacci retracement levels, and we have taught you how to use it. We only use it, or we only apply it if the market has made an impulsive move and we want to get a confluence. So when we drew this Fibonacci retracement level and we went down to our entry time frame, this is how it was appearing. This is the Fib level. You draw it from the top left corner up to down. You draw it from left to right. Since this is a sell, we shall start from up to down, meaning that our 100% level will be up, or or the 1.0 level. This is the 100%. This is the 0, right? So 78 is up, 68, the golden ratio, that's why it's red. Then we have 0.5. We made it red because it's a golden ratio. We have taught it extensively in that video. I'm just going to put it in the card. Make sure you watch it if you don't understand Fib levels. Then we have the 38. Now, I want you to see something interesting here. The 38% level, remember we drew it in weekly. This is an impulse, but I'm showing it to you in an entry time frame because we want to take a trade from H4. Now, when we drew this impulse here, you can clearly see that the 38% level is aligning accurately with this level here. It means that there's a high probability that the trade could actually reverse from here. Are we together? Why? Now, this is the analysis tools confluence. Why? Because we have a very strong previous support turned into resistance. Also here, previous support and the same previous support and two resistors. Now, when you bring in the Fibonacci retracement tool, it's also showing that we do have a Fibonacci retracement level here, the 0.382 level. Or if you're using percentages, it's the 38.2% level. Are we together? So it means that this is a very, very strong level that the price would actually reverse from. As you saw earlier on, the price didn't even attempt to manipulate beyond it. It just reversed and dropped down. Are we together? So this is how you do analysis, how you do the analysis, how you use analysis tools, Confluence. Some of you are very good with, I've used Fibonacci because it is my favorite, right? It's a technical tool, but I can bring it in. Now, I'm not a very big fan of indicators and other methods like supply and demand, but of course, once in a while, we can apply them. But majorly, I like using the Fib tool because a pure price action tool that is provided to us by the charting tools like TradingView, MetaTrader that we normally use, right? And I like keeping my charts clean. Now, when you start bringing in moving averages and what, the chart may not seem very clean, but you can also use them. Also, personally, once in a while, I use them, but mostly I like using a Confluence of Fib, especially if I'm seeing there's an impulsive move. If there's no impulsive move, then once in a while you can bring in the moving averages. But in this example, I've used Fib because it's what I like most, right? So you can clearly see I've illustrated here monthly, we're having a retest. Weekly, we had broken down and we're retesting, and we had an impulse. So after an impulse, once again, what do you bring in? You bring in your Fib tool from up here, up to down where the impulse started from, up until where it ended and started rejecting. So this is how it appeared, and you can clearly see the 38 level comfortably sitting there. Then you can easily go and look out for your entry rules, and then you take the trade, right? So that is how we do use our Confluences when we're doing our trading. Please, if you're a trader and you really want to take it serious, make sure you're not only considering one aspect to take your trades. So that is it. I'm just going to attach the Fibonacci retracement tool up here, and also how you can clearly and nicely do a multi-time frame analysis, plus also how you can draw or support and resistance so that you can use them. Because these are the very, very core ones that almost every trader has used before or is still using. Personally, I still use these methods because they're very simple for me and they're very easy to use. So that is it for today's video. If it made sense to you, make sure you give us a thumbs up, right? Let's meet in the next video. Have a great day.